You're really going to need a drink after this one. AMC stock currently is up over 4%, and the cost to borrow rate is now at almost 74%. Yes, you heard that right, 74%. Now, why is that? What is happening today with AMC stock and the broad markets that you need to know about? That will be provided to you here in this video. So let's get straight to it. AMC stock at the second of recording this video is at 3.79%. By the time you guys see this video, we are wrapping up the end of the day. We could be lower, we could be higher, doesn't even matter for the relevance of this video will be relevant past the close today. Obviously, we don't have a lot of economic data coming out. We really don't have much that is going to move the markets in a big way. You do have Disney, and Disney does have Disney Plus, so that could move AMC stock. I'm not going to hold my breath. I'm not going to make bets or assumptions related to that. But what we're seeing with AMC is phenomenal here today. I mean, can you even put it into words what we've seen today? We were down over 8.5%, almost 9% at one point today, and now we're up 4.50%, 4.5% at the time of recording this video. You're also seeing cost to borrow rates spiking, and the most important thing I want to point out is something that might be redundant if you watched the last video, but the fact that AMC literally bounced right off of its 200-day moving average, like down to the penny. 200-day moving average at $20.76 per share, and the stock did hit a low today at $20.73 per share. So right at that 200-day moving average, you did find an incredible bounce, and now you are getting just a pretty big rally from yesterday's low at $21.74 as well, and it was not looking like that in the beginning of the day. So I do think we are in for a rally, and specifically with the cost to borrow rate, I do think it is going up so much today at 74% or so, because of what we have seen with AMC stock. When AMC makes a 12% or more round move from the bottom to the top, and it's just having a very volatile day, well, people tend to charge more for those options. So I don't think it's a wild concept here that the cost to borrow rate is at 74%, given what we're seeing with the stock here on the day as well. So there is that, and I think that explains the cost to borrow. But look at this cost to borrow max, 73.29%. Cost to borrow minimum, strangely enough, is at 0.75%, and the cost to borrow average is at 8.88%. You are seeing about $2 billion worth of AMC shares that are sold short. The estimated short interest of free float sits at 18.29%. You are seeing a free float out on loan at 24.62%. Shares out on loan 127 million. Days to cover 2.75. Cost to borrow 9.01, and 100% share utilization. So you definitely can't be mad about these numbers that we are seeing here today, especially that cost to borrow rate. Let me know what you guys think about that down below in the comment section. Nonetheless, as far as the option activity for the day, 30 orders totaling $2.37 million positive order value, still pegged at 81%. So it looks like a lot of hedge funds are very bullish on AMC stock. It looks like a lot of individual retail investors are as well, and it does look like you might start to see some degree of shorts covering if we do get that next leg up. And if we do specifically break out past 27.50, you're probably going pretty aggressively to about $30 per share, and then from there the sky could be the limit once the shorts really start to cover in a big way. So those are the big things involved with AMC, and really the data that you guys need to know. If you guys also don't know, you have Disney earnings here in after hours. Like I said earlier, you have Dutch Bros, Coupang, ADMA Biologics, Matterport, Sonos, Marquita, Bumble, Alpha and Omega, and Valco Energy. Obviously, the big one is going to be Walt Disney, as they are a $200 billion company. I like to think those results are going to be good. There's a wide range of analyst comments between it's going to be really bad or it's going to be really good. So I don't think the markets really know. I do expect a big move in one direction or the other, and that could feed into different sectors of the economy into different sectors of the stock market, and that's what could have the biggest moves. Disney will affect Netflix. It will affect anything that is streaming related. To what degree? That really depends on what Disney says and what kind of numbers they do pull, but it also could be a very, very bullish thing. And as far as the only data we get tomorrow, you have PPI month over month for July. That is expected to come in at 0.2%. If we do get, this coming in higher, I don't think the markets will necessarily sell off 3-4%. I don't think it's going to be that big of a deal, but I do think you could get maybe a 0.5% red day tomorrow if this does come in bad. After all, today in the markets is very strange. As you can see, we're wrapping up the end of the day right now, but you basically gapped up and then you've just been holding those gains, but we are really starting to top out around 420, 419, 420. That is a really tough zone to break. We did hit the high at 420. 04, so only 4 cents above, and we did get rejected. So if we can't break out above 420, well, it looks like the only place to go from there is probably back down. Now, the big story of the day, and this is what I was saying is kind of, a good and a bad thing, right? Consumer prices rose 8.5% in July, less than expected as inflation pressures ease a bit. And it's just the expectations are so wild that even though inflation rose 8.5% in July, people are happy on that. Right? It's a good thing. But I will say a quote that I said in the last video that I think is very important to just always remember. And it goes something like this. I'll just paraphrase it for the second time again. It says, 1 month does not end a trend, but it can start a trend, right? So this reading that we got with CPI for the month of July doesn't necessarily mean inflation has peaked or this trend of rising inflation is over, but to start a new trend, you have to have a month at least that you start to get data that goes against that trend, right? Which we are now starting to see that with inflation. And I think that's important in this general market to keep in mind, because it's not to say inflation has peaked. People can think that, but the markets are not going to trade based solely off of, yes, this one report means inflation has peaked. You might get a little bit of that every now and again, especially when data comes out. That will be very, very important, but that's not necessarily the case as of right now. And it does say, excluding volatile food and energy prices, so-called core CPI rose 5.9% annually and 0.3% monthly, compared with the respective estimates of 6.1% and 0.5%. The report was good news for workers, who saw a 0.5% monthly increase in real wages. So that is definitely a good thing. If inflation only rose 0.3% monthly and the wages rose 0.5% monthly. I don't know if you guys are getting raises, but I don't know too many people right now that are getting wages, so I don't know where this data is coming from, but the stock market is definitely eating it up here today. S&P up about 2%. Now, if we take a look at what really this data, the CPI, has caused to the Fed futures market, and this is a market where people, not usually small retail investors, but big money, bets on what the Fed is going to do next. And as of yesterday, we had a 52% chance of a 75 basis point rate hike. Now we only have a 34% chance of a 75 basis point rate hike. So the markets are starting to say, hey guys, we might not get that big rate hike, or we might start to see the Fed slowing down, but it's really going to revolve around data. And that's why the next CPI report will be even more important than this one, because it will either confirm one of two trends: if inflation will continue trending to the downside, or if this was just a blip and inflation continues to march on higher. So that will be very important, and that will really dictate what the Fed is going to do at that September 21st meeting. Now, as far as other things you guys need to know specifically with AMC and the technical analysis, AMC currently at up 4.32%, so definitely a great day. Volume kind of low for the day at about 51.5 million shares. The RSI never got a chance to go fully back into a more normal zone. We've been overbought still. I think that is, a positive thing overall, but it does mean that potentially it wouldn't be surprising to see a move down, or at least more consolidation to get the RSI to go back into a more normal territory. The MACD is extremely bullish and has not really faltered at all, besides for a brief moment here when we did hit that high of $27.50 per share. That was August 8th. Ever since then, still, it's even gotten more and more bullish. And the fact that we bounce off the 200-day moving average perfectly tells you a couple things. It tells you that is going to be a support level, and it tells you there is a lot of demand, and this is probably being run by algorithms. And when you look at the option activity that is extremely bullish on AMC stock, and you look at the cost of bar rates, and you look at everything else, I think the consensus is clear here that AMC stock is probably going to go a lot higher. So that is going to be all for this video. That's what you guys need to know. Hit that like button and subscribe to the channel if you guys have not already. Thank you for watching, and I will see you in the next one.